You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Friday, 11th day of April, 2025. If you don't have those tax returns in the mail, you got 4 days Don't want to mess with those IRS folks. Two people in life you don't want to aggravate. Number one's God. And yes, number two, the IRS. Okay? So, even if you're running behind, if you haven't got all your paperwork together, if you're still waiting on some kind of documentation, make sure you at least file an extension. Okay? And if you have no idea how much money you're going to owe, if you're going to owe, send some token amount, $100, whatever, something. Okay? And then they won't come after you. But after you file the extension, make sure you follow through and complete your return. Okay? It's really important. All right. Thanks for joining us. Whoever you are, wherever you are. As always, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first one, that's our live training room, 9:30 a.m. to 11:30 a.m. Eastern. That broadcast is reserved for members only and those taking their 1-week free trial. If you've not yet taken your 1-week free trial, when Michael joins us in about 50 minutes, he'll walk you through the process, step by step, right on the screen. In fact, you can follow along and do it as he's showing you how to do it. We'll get your indicators up and running today. You'll have the weekend to kind of get familiar with them. And then your 5-day free trial will be next week, Monday through Friday. And remember, there's no credit card required. We don't want you fretting over money. We want you to focus on what's being taught so that at the end of the 5 days, you can make a well-informed, intelligent decision whether or not trading is right for you. Okay? Now, when the live training room ends at 11:30 a.m. Eastern, we take a 30-minute break and come back at 12 noon Eastern for the afternoon broadcast. Unlike the morning broadcast, this broadcast is open to the public. That's everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. Going forward, what will happen is every trading day, you'll get an email about an hour before the broadcast starts. In the email, there's a link, so at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit of doing it that way is you have access to the question box so that you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from the desktop, but you still want to join live. And some days, you'll be busy. Imagine that. So you can't join live, but you want to get caught up later. Fair enough. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN, Christian Financial Radio Network. But you don't have to remember all that. Just remember CFRN because you've already got the YouTube part memorized, right? Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are and see how we've evolved over the years. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. But again, it's a great resource to have as you become a part of our community to see where we started and the journey that brought us to where we are now. youtube.com/CFRN. As you can see, we have our daily schedule for the afternoon broadcast posted right here. So we'll dive right into our daily devotional. The topic that we're on right now is listening to God. Today's scripture is 1 Samuel 3, verses 8 through 9. And I'm going to share it with you from the Message translation. God called again, Samuel, the third time. Yet again Samuel got up and went to Eli. Yes, I heard you call me. Here I am. That's when it dawned on Eli that God was calling the boy. So Eli directed Samuel, go back and lie down. If the voice calls again, say, speak, God, I'm your servant, ready to listen. Samuel returned to his bed. Then God came and stood before him, exactly as before, calling out, Samuel, Samuel. Samuel answered, speak, I'm your servant, ready to listen. Again, 1 Samuel 3, verses 8 through 9. So how do we actively listen to God? Samuel was one of the greatest prophets in the Old Testament. I don't believe it's a coincidence that his first assignment from God was to listen for God's voice. Samuel's story shows us that there's a difference between active listening and passive hearing. Let me say that again. There's a difference between active listening and passive hearing. How many times have you heard your spouse say something but you have no clue what they said? You heard them, but you didn't hear them. Follow me? Samuel's story shows us there's a difference between active listening and passive hearing. Hearing is something we do with our ears. If our hearing is normal, we can't help hearing sounds traveling within a certain range. Listening, however, involves the mind. Genuine listening is active. It involves putting the mind in gear to hear everything that's said, as if it has meaning to the listener. So in other words, after your wife says it 3 times, or your husband, you finally hit mute on the remote and go, what? See, now you're not passively hearing, you're actively listening. That's the difference. That's how God calls us to listen to Him, actively. He wants our full and undivided attention. So let's take a look today at what I believe are the 10 key aspects of listening actively. Number 1, expectantly. If we're going to listen actively, we must come before the Lord expectantly. We must anticipate with eagerness that He will speak to us. 2, quietly. The Lord says to us, cease striving and know that I am God. Psalm 46:10. In another translation you may have read, "Be still and know that I am God." If we're to hear from God, we must be quiet and let Him do the talking. Number 3, patiently. The Lord doesn't always tell us things all at once or instantaneously. Sometimes He speaks part of His message to us at one time and another part at another. Other times we hear a message from Him only after we've been waiting for a season. 4, confidently. As we listen to God, we must be confident that we'll hear what we need to hear. It may not always be what we want to hear, but we can trust God to tell us what we need to know so that we can make decisions and change certain things in our lives for our ultimate good. 5, dependently. Have you ever heard the comment, "Do it as if your life depended on it"? That's the way we're to listen because our lives depend upon our hearing. We must have no agenda other than God's agenda for our lives. 6, openly. We must come to God with hearts and minds open to receive whatever He chooses to give us. To listen openly means to be willing to hear God correct us as well as comfort us, to hear Him convict us as well as assure us, and to hear Him chastise us as well as praise us. Number 7, attentively. To listen attentively means to attend or pay attention to each word. This is more than expectancy that God is speaking. It's listening to each word for all the nuances of meaning, all aspects of the message God's giving. When we truly listen attentively, we don't miss a thing. 8, carefully. To listen carefully means to listen for the Holy Spirit to confirm that the word which we're hearing is a genuine word from God. We must put everything we hear to that test. It must line up with the written Word of God. 9, submissively. To listen submissively means that you listen with the full intent of obeying. If you plan to obey what you hear, you obviously take care to understand. Submitting to God's Word is the only way you'll ever find genuine meaning and purpose in life. Only as you submit to God can you hear from Him clearly and be in a position where the Lord can do for you all He's promised to do. And number 10, reverently. A reverent heart stands in awe of God. What a privilege we have to hear from the God of the universe, the creator of everything. When we listen reverently, we listen with wonder. First, that God would even speak to us, and then that God would invite us to be a part of His plans and His purposes. All of these aspects of active listening are ways in which we truly have ears to hear. Jesus said repeatedly to His disciples, "He who has ears to hear, let him hear." You'll find that in Matthew 11:15, Matthew 13:9, and 43. May this always be true of each of us. Listen up. Let's pray. Heavenly Father, just as you called Samuel, we ask you to call us and help us recognize your voice. Give us hearts ready to hear, obey, and follow wherever you lead. Teach us to be still in your presence and to respond with faith and humility. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Friday. Everybody's been working for the weekend, and by golly, here it is. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow up 164 points. The NASDAQ up 132, which is almost 1%. S&P 500 up 34. But sadly, the Russell, our man in the street, doesn't seem to agree. The Russell is down 17 points, almost 1%. We'll see how that changes by the end of the broadcast. All right, in the commodity basket, crude oil up 56 cents, trading 60.63 last. That's a gain of almost 1%, or $560 per contract traded. Gold up $81.40, trading 32.58 last. That's a gain of a little over 2.5%, or $8,300 per contract traded. Silver up $1.36, trading 32.12 last. That's a gain of almost 4.5%. Now, when silver moves $1 in either direction, that's worth $5,000 per contract traded. And again, we're up $1.36 on the session. So that's about $7,500 per contract traded. In the Asian markets at the close, the Nikkei dropped 1,023 points, 3%. Shanghai rose 14. The Hang Seng gained 232, which is almost 1.25%. In the European markets at the close, FTSE up 50. The DAX down 188, almost 1%. And the CAC down 21. So we had a mixed day in Asia. It was a mixed day for the UK. And thanks to the Russell, it is a mixed Radio Friday here in the US of A. But now the Russell is only down 13 points, 0.75%. So, we just might see the Russell turn around. We'll probably have a good idea by the time we actually get to the chart. News time. What do we got? The Trump administration's anti-Semitism task force aims to pursue a consent decree. That's easy for you to say, decree, with Columbia University as a condition of restoring $400 million in annual funding, which personally I'm totally against. They have an endowment over $1 billion. Why do they need working class taxpayer dollars? Oh, it funds important research. Mm, yeah, okay. Whatever you say. I'm really surprised that Trump gave up that easy on that. A consent decree would give a federal judge the responsibility to oversee changes at Columbia and may last for years. The report follows a turbulent month at the school where its interim president, who took over in August, resigned a week after conceding to administration demands. The Joint Task Force on Combating Anti-Semitism, first created in early February by executive order, has launched over 60 investigations into major universities for alleged anti-Semitism and civil rights violations. This week, the administration froze 1 billion, that's B as in billion, in grants to Cornell, 790 million to Northwestern amid the probes. The State Department has also rescinded visas from nearly 400 students for their alleged involvement in campus protests. That just made my day. The administration has also reduced Federal Department of Education funding and laid off roughly half its workers. They weren't doing anything anyway. Again, why should the middle-class American taxpayer have to pay for the shenanigans of this bureaucracy? Trump's doing his best to clean house, but man, the left is fighting him tooth and nail. Prada. The Devil Wears Prada, remember the movie? Prada Group announced yesterday it will acquire Versace from Capri Holdings for just under $1.4 billion, uniting two of the biggest names in Italian fashion. The deal, backed by approximately $1.6 billion in new debt, is expected to close in late 2025, pending regulatory approval, and comes amid market volatility driven by tariffs and a broader slowdown in global luxury sales. The acquisition returns Versace to Italian ownership after 7 years with US-based Capri, which originally bought the brand for $2.1 billion in 2018. Yeah, people always overpay. You can get the same shirt at Walmart or Versace. The only difference is the label. Hang on for me 1 second. Alright, sorry. I'm easily distracted. My apology. Bad host. Gold was winning the top haven spot today, zooming past a record $3,200 per ounce, while bonds and the dollar slid. Gold futures were on track for their best 5 days since 2020 to cap what has been a chaotic week on Wall Street against the backdrop of an escalating trade war between China and the U.S. I don't see a trade war. I see us walling China off from the rest of the world. On Friday, China said it will raise duties on imports of U.S. goods to 125%. Boo-hoo. The move was in direct response to the Trump administration raising its reciprocal tariffs on China to 145% this week, while duties on other countries were paused for 90 days. She's in a lot of trouble. The angry villagers with the torches, they're going to be storming the castle here pretty quick. wouldn't want to be him for a lot of reasons. Okay, the Boston Fed President Susan Collins told Yahoo Finance she expects the central bank to hold rates where they are for longer than expected due to economic uncertainties triggered by President Trump's tariffs. But it may still be appropriate to cut towards the end of the year. You do understand that the longer the Fed keeps rates higher, because you see, they print the money and they loan it to the American people, something Thomas Jefferson warned us to never allow to happen. And President Kennedy was trying to stop shortly before he was assassinated. Anyway, the longer the interest rates stay high, then the interest that we pay on our debt, the 35 trillion, 36 trillion, well, the rich families who own the Federal Reserve, they make more money. What incentive do they really have to lower interest rates? That means they make less money. They might have to sell off one of their yachts. Oh my gosh. Or maybe sell one of their G5s from their fleet. Man, that would be horrible. Gasoline prices are expected to fall in the weeks ahead if the sharp drop in oil prices holds. Today, the national average of gasoline set at $3.21 per gallon, about 13 cents higher than a month ago, but nearly 42 cents lower than a year ago. Over the past week, and that's according to AAA, over the past week, prices at the pump declined a nickel per gallon as oil has tumbled, partially reversing a recent monthly spike amid refinery maintenance and a switch to more expensive summer blends of gasoline. I mentioned this yesterday. To be profitable, these oil producers, they need oil to be at roughly $74 a barrel. They can squeak by at $70 a barrel, but anything under that, they're losing money. Now, Crimea River of Tears, they have billions upon billions in the bank. Something most middle-class Americans don't have. So, if they have to eat TV dinners for a while, pray first. And last, U.S. producer prices notched their first monthly decline in nearly 1.5 years in March, as gasoline prices plunged, but tariffs on imported goods are expected to significantly boost inflation in the coming months. Trade tensions have escalated between the United States and China, the main source of imports, making last month's Producer Price Index report, published by the Labor Department today, dated. The March PPI report says next to nothing about the inflation outlook, which depends overwhelmingly on tariffs, according to Bill Adams, chief economist at Comerica Bank. Inflation will accelerate considerably if the tariffs stay in place. Make it in America, buy it in America, no problem. No pain, no gain. So, you can stress out, you can freak out. It's not going to change anything. Because you're not in control. Neither am I. Okay, let's do this thing. Logic 247. That's our 24/7 around-the-clock E-mini alert service. Not just E-minis, also crude, gold, silver. We're in week 349, and over the last 349 weeks, we have issued over 19,300 individual handcrafted alerts, and we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Valerie did the recap this morning at 8:30 a.m. Eastern. She'll update it this afternoon or early evening, finalize it for the week. Now I want to show you the difference between yesterday and today when we talked about it at this time. So yesterday we were sitting at 10% stopped out. Today we're sitting at 11% stopped out. Yesterday we had 31 actionable alerts, but today we have 46. From 31 to 46. This number was at 26. It's now at 39. Yesterday we had 3 stop outs. Today we've got 5. So, which is better, this or this? It's not a trick. I guess it is kind of a trick question, but you'll figure it out. Now, every Logic 247 alert has an entry price, an initial target, additional targets, a final trade to target. Now, the initial target is designed to help you get your goal for the day. The maximum you risk on a Logic 247 alert is $300 per contract traded. However, you never risk more than the potential profit in a trade. Now, yesterday, if you missed yesterday's broadcast, you can go to the YouTube channel and watch it. I went through every alert that's been issued so far this week. And, well, let's just say God was good. Okay? Now, purpose of the Logic alerts. I'm sorry, guys. I got to put you on hold for just 1 second. Okay, sorry about that. The bat phone rang, and when the bat phone rings, I gotta answer, like it or not. Yeah, Chris, I see your post. You're right. More volatility is more opportunity. But here's the deal, it has to be manageable volatility. There is such a thing as too much volatility. But you're right. As futures traders, we don't care if the market's going up or going down as long as it's going somewhere other than sideways. And we've had lots of up and lots of down. So, yes, you are correct. Thanks for your comment. As I was saying, all right, every logic alert has an entry price, an initial target, additional targets, final trade to target. Maximum risk is $300 per contract traded. Now, this is really important. Make sure you hear this. If your plan is to just get your goal for the day, like take 2 points out of the ES, that's $100. You do not risk $300 to make $100. Now, as I went through all the alerts this week yesterday, one by one, okay, many of those alerts had thousands of dollars of potential profit in them, okay. If you're going to stay in all the way to the final target, if it gets there, the maximum you risk is $300 per contract per trade. But if your plan going in is to jump out as soon as you get your 2 points, then you can only risk $100. So when you look at an alert and draw the lines on your chart, you got to ask yourself, going into the trade, am I getting out at the initial target? $100 risk. Okay, the second target, how much potential profit is that? Wow, that would be $600. But you still only risk 300. That's the maximum risk. I don't care if there's $100,000 of potential profit in the alert. You never risk more. If you got to risk more than $300 per contract traded to find out if your trading and your observation and your decision making is tracking with the market. If the price of admission is more than $300 per contract, walk. Okay? That's why I put that initial target in every alert. If you want to get out, and that's what you get taught in the live training room. And you really need to learn the mechanical model before you wander off into the world of discretionary trading. Okay? The mechanical model is taught every day in the live training room. Master that, then come to me and learn how discretionary trading works. Okay? All right. Logic alerts can come out anytime around the clock, 2 a.m., 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. So, last week we ended up with 2% stopped out for the week. Am I concerned that we're at 11%? No. Over 349 weeks, we've averaged 20% or less. We've actually had weeks with 0%. But that's a story for another day. And once the week is complete, it becomes part of the public domain. Anybody can look at it. And of the 19,300 plus alerts that have been issued over the last 349 weeks, every one of them is recorded in the Logic 247 channel. Even the beta test, the historical results of that almost 7 years ago. It's in its channel as well. All right. Long before we had Logic 247, we had our original alert service, the concierge trade alerts, and they're different. Number one, they don't come out around the clock. They don't have entry prices, initial targets, additional targets. No, they give you a bigger picture look. Okay? This truly is for the discretionary traders, ones who've already mastered the mechanical model. Last night, these targets came out 5 minutes ahead of the Globex Open. The Friday session that we're in today began last night at 6 p.m. Eastern. On the days when I'm able, I put out the targets 5 minutes ahead of the open, and I always let you know in the discussion group if they're coming out at 5:55 or not. And goodness, I'm gonna have to do it again. All right, all these phone calls wear me out, and all members and trial members had all of these targets 5 minutes ahead of the open. So we'll go NQ, crude, Russell, Dow, yes. Okay. Okay. All right. So it's almost time for Michael to show up here. So let's jump to the chart real quick. What in the world? How'd that happen? Huh. Something went wonky. Okay. Well, there we are. Leg and a retracement, leg and a retracement, leg and a retracement. As you can see, the pullback to the BBC holds more often than it doesn't. Even when it's pulling from above or if it's pulling from below. So now we have a very interesting situation. Obviously, we have a bullish green candle. Where do we find support? Where we talked about yesterday, red and falling. When it gets directly below price, it becomes support. So the market opened here last night, ran all the way down to where we would anticipate there being support. Had it traveled through there, then we would expect support at the 24% fib. But red and falling held. That sent price back up to where it opened. That's why you have the wick. And now we've exceeded the open from last night. We're all the way up to the 38% reverse fib. Now I say reverse fib because in a downtrend you draw from the high to the low. In an uptrend you draw from the low to the high. Okay? So how we close today, if we close bullish, if we close anywhere above the 38% reverse fib, now remember we still got the 50 overhead, and we talked about what would happen after this historic day in the markets. We got a perfect 50% retracement, and now look where we are. Okay, now is there any guarantee this is going to hold into the close? Well, I'll tell you this, how we close today will tell you how confident traders are, institutional traders, on price ultimately moving substantially higher. And while there's been so much noise from the media, go look at a monthly chart on TradingView. Okay, go look at a monthly chart and see what a blip on the radar screen this recent sell-off is in the grand scheme of things. Yes, I know for people with 401ks, retirement portfolios, and on the media, they're just fear mongers. Oh, people have lost so much money. No, they haven't, unless they sold. If they got yippy and pulled the plug, yeah, they lost a lot. But as the president said, and as I've said for a pretty long time, it always comes back. It's historical. Go look at the charts. Back to the beginning of the markets. You can actually do that on TradingView. So, I always give you the spiel about why you should look at the daily chart before you start trading each day. I'm going to pass on that today because we're short on time. So my phone won't quit ringing. Alright, all alerts are created on the 30-minute chart. Logic 247 and the concierge trade alerts. Okay? Now, the vertical line separates today Friday, over here's Thursday. These are weekly trading zones, which are published Monday morning at 6:15 a.m. Eastern. We've published them for the last 15 plus years, since December 14th of 2009, every week for our members and even trial members. When price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance. These are the zones that were published Monday morning. This was the opening candle last night, and remember, everyone had these targets 5 minutes ahead of the open. So we open bullish, but we run into the zone. What do we expect? Resistance, right? And what does resistance do? It always sends the market looking for support, which it found at the short target. Then it gave us this beautiful doji, which is a pretty good indication that the market's about to make a turn. Leg retracement, leg retracement, leg retracement. Boom, long target. Now this high, it barely took out this high. Now we're about ready to challenge it again. Be very wary at this area right here. The high of this candle and the high of this candle. Here you've got a double, almost a triple top. So there's going to be a challenge getting through that area the first time up. So after hitting the short target, we've now hit the long target twice. And we're heading for the next zone above. And there's still one more zone above that. But there's so much right here. See where the step line crossed blue and climbing, turning it back to red and falling? That is a huge, important price, important area. High of this candle, same thing. High of this candle, same thing. Just look at the logic alerts. I published last night, and it will show you all of these areas of potential resistance. That's why the logic alerts help you learn how to read a chart. Okay. The Dow. Here's the open last night. Bing, we hit the zone. Resistance sends us right down to the target. Short target to the tick. Support will always send the market looking for resistance. This high is this high. Okay. Obviously, I was basing the long target, which we're about to hit, off this high. But was there plenty of room in this move up to get you go for the day? Well, just look at this one candle here. It opened at 131 and it put in a high at 260. So that's 130 points in that one candle. It only takes 20 points to get your goal for the day. Follow me? Okay, good. Now, when price runs into a weekly trading zone, only one of three things happens. 70% of the time is going to be this, consolidation. 20% of the time, rejection. 10% of the time, the slice. If I run across a good example of a slice, I'll show it to you. Okay. Typically, when price on the 30-minute chart slices through a zone like it's not even there, when it runs out of steam, it'll retrace back to the zone it sliced through and then continue in the direction of the slice. The Russell. This was the open last night. We hit the BBC. Remember, the pullback holds more often than not, like it did here, and here, and here, and here, and here, and again here. And that sent us right down to where? Support at the short target. Okay. Support will send the market looking for resistance, which it found at the long target. Okay. Resistance sends the market looking for support, which it found at the zone. Consolidation. Made another run at the long target, didn't quite get there. So we got a high, got a lower high. Now remember, the Russell, when I gave you the numbers from around the world, the Russell was the only one in the red. Let me check it right now and see if it's still in the red. It just may have turned around. The Russell's in the green now by 2 points. Okay. All right. That's based off yesterday's close over here. See how it sold off? So we hit the short target multiple times. And I got a feeling we just might hit the long target again. But be careful, because you got potential resistance here. And as you can see, price is reacting right there to that resistance. And then again here. And then again here. And then again here. Here. And obviously here. Okay. But here's the deal. You only need 2 points a day if you're trading the Russell to get your goal for the day. So if you got in at 1854, the high of this candle's up at 56. There's your goal for the day right there. 2 points. Okay. All right. In Q, here's the open. Drop to the short target. Support. Set us to the long target. Resistance. Send us back to support at the weekly trading zone. Support set us to resistance at the long target. Resistance sent us back to support. We banged the long target a couple more times. Back to support. 2 candle consolidation. Now we've traded through the long target, and the high of the session is sitting right here at 795, and the high of this candle is 790. So we're within 5 points of taking out the high of the session on the NQ. All right, Michael's here. So we've covered everything but crude, gold, and silver. We'll catch those when we come back. Right now, Michael's going to give us a recap of what happened in the live trading room and do some live trading on the TradingView platform.
And here it is. Yes, ready to go. Ready?
Okay, looks good.
All right. Good afternoon, everyone. Let me just refresh this page because it's going to bring me to the new registration link. Oops, refresh this page. It's going to bring me to the new registration link. Just make sure that does. Yes, it does. Okay, here we go. Good afternoon, everyone. Today is Friday, the 11th day of April, 2025. Now, if you have not taken a free trial, let's go here to mytradingiq.com. Click on the purple button right here. All right, there is no credit card required for the trial. Just click on that purple button. It's going to bring you to this registration page, where all that we ask for is your name, your email, your phone number. Down at the bottom, make sure you give us the TradingView login ID that you have. Okay, username, login ID, whatever it is. If you don't have one, click this link. It's going to bring you to, well, I'll just click the link. It's going to bring you to this page. Watch this little video and follow the instructions, right? Essentially, you're going to end up clicking on this, and that's going to bring you to this page. We need to click on monthly and then choose a package. If you just want to have 2 charts, choose this one. If you want to have 4 charts, choose that one. Okay. $14.95, that's after a month. You know, I think they give you a month trials free still. You will have to get real-time data. All right. Frederick, I just got your text message about the problem you were having earlier today. And hang on, go down to the bottom and see what it says. Okay, yeah, I can't even see what you're doing there. Bigger problems. This is what comes up when you try to open TradingView. Okay. Those are bigger problems, but it's not that big. You're just looking at the wrong thing. You're not clicking on charts. All right, let me just blow this up. You need to click on, see what you've clicked on is something down at the bottom. This is showing you a bunch of other stuff that you don't need to see. You need to click on, I don't really see it, but you've blown up the bottom part of it. So click on this right here, and that will reduce it down, and then you'll have your charts up at the top. That's what you need to do. Okay, Frederick, I don't know if you're in here right now. Are you in here? Let me see. Nope, Frederick's not in here. Anyway, that's the problem with that one. All right, so for everybody else, the essential, and then you gotta get your data. All right. So unknowingly, we had our best day of the year today. I didn't really realize it until the end of the session when I actually went through everything and tallied it all up. But if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today, we're up 108 ticks on the Russell, 40 ticks on gold, and 259 ticks on the ES. That's with one contract, 259 ticks. Now, the reason I hardly traded the ES all week this week. And today at the beginning, I wasn't going to trade it. And then Bobby, one of our guys, has been with us for a long time, said, you ought to try the 19 range. And so I went to the 19 range, and I just had a whole bunch of success with the 19 range. So we'll get into all that in just a minute. Today it took 2 minutes and 1 trade to get to the goal for the day. At that point, we're up $1,000, and that's with 10 contracts on. And we took a total of 45 trades today, so that's more than any other day this week. On the month now, we are up $17,347 over 7 business days, averaging $2,485 per contract per 2-hour business day. That is unheard of. That is a huge number. And on the year, we're now at $101,685. So we're not even through the 4th month, and we're at $101,685 per contract. Told you 2025 is going to be different. Over 60 days, we're up $1,694. Right, $1,694 averaging per contract every single business day. Following the 2420 blueprint, if you did follow the 2420 blueprint, you'd be at 4 contracts right now, and we would have only had to work 8.33 hours and be up $21,232 following what I do in the room. All right, averaging $2,547 an hour. Not bad. Now, let's get out here and get into the trades, all right? I didn't trade anything on the NQ again today. I didn't even look at the NQ this morning. But we did trade a bunch on gold. So let me hit the Alt and the back button. Now, gold we're back and forth on quite a bit. we ended up positive 40 ticks. Positive 40 ticks. Peter, did this work out for you? The control and the alt both do the same thing. The control and back and alt and back both do the same thing. I don't know if you figured that out yesterday. But gold is where we got the gold for the day. This very first trade is where we got the gold for the day. I picked up 10 ticks on that one. Then the very next one, we stopped out. We got minus 15 on the next one, so that put us at minus 5. Had a break even, another break even. Then we had a plus 25 right there. That got us to plus 20 altogether. Then we had a break even, then another plus 25. That got us up to 45. Then a plus 4 got us up to 39. And I didn't enter that one in, but we stopped out and went from 49 down to 34. And then from 34, we went up to 59 right there. And from 59, we stopped out. Well, we had a break even, then a stop out. We went down to 45. Then we had a 5-tick gain, put us up to 50. Then we had a stop out, brought us down to 35. And then one more trade right here. We picked up 5 more ticks to get us up to 40. And that is where we ended it with the gold. So we're back and forth quite a bit on the gold. Now this morning, I did consider going back and forth, trading the aggressive trades when it got choppy. To do that, all I have to do is drop the slingshot on there and just take the trades when the blue's going into the overbought or oversold by itself. All right. That's all I have to do to switch back and forth. But I think I only did 1 or 2 trades like that, and I think they were both break even. The conservative trend trades were working really well today, particularly for the ES and for the Russell. For the Russell? Yeah, for the Russell. On the Russell, we're actually back and forth quite a bit on the Russell too. We're negative for a little while on the Russell this morning. You can see there were a bunch more trades in here on the gold going through the break this afternoon. Now the Russell, let's do this. Let's do control back instead of alt. It does the same thing. It's just easier for me to put my fingers on. And ding, right there. All right. So on the Russell, we started out with a stop out, minus 25. And then another stop out, minus 50. Both those were good trades. I didn't make any mistakes on those. They were both good, valid trades that both stopped out. And then we finally went from minus 50 to minus 25. So we picked up 25 ticks on that one. And then went from minus 25 to minus 15. So we picked up 10 ticks on that. And then went from minus 15 to, I think that's plus 3. Yeah, minus 15 to plus 3. So we must have had an 18 tick trade there. It went from plus 3 to plus 6. I think. No, we had a 40 tick trade. No, we had a 60 tick trade there. That's what we had. We had a 60 tick trade there. My bracket was wrong, and we went all the way to 60 ticks. We went from plus 3 to plus 63. That's why I was looking so off. And then we stopped out because my bracket was still wrong. We had a 40 by 60 bracket on. So in this one right here, we picked up 60 ticks and we went to 63. And then we stopped out here and we went to 23 because they had a 40 tick stop out right there. But then I caught on. And the next trade we got was right here. We went from 63 to 108. Oh, I'm sorry, we went from 63 to 88. Sorry, it was a 20 tick. From 63 to 88, then 88 to 108, and then 108, we had a break even. We had something there that I didn't enter in, and then we stopped out, went from 108 down to 83. So there's 2 trades, positive trades that I didn't enter. Then we had a break even there, and then we went from 83. After stopping out from 108, we went down to 83, and from 83, we went right back up to 108. Okay, right there, went back up to 108. And that's where we ended it for the Russell. But there was a ton of opportunity on the Russell, and it was trading really well today. Meaning, the pullbacks, if it was going to stop at 50%, it usually stopped right at 50%, and if it wasn't, it usually went right to the 100%. And the flat spots were where they should be, where you would have expected them to be. So it was trading really well. Using a conservative trend trade, you don't worry about the flat spots, but you can use the flat spots, the knowledge of the flat spots, or the knowledge that you know about where price should go to when it's in a trend, because they're all trend trades that we're doing, where price should go to on a run and on a pullback. Couple that knowledge with what the indicators are telling you, and there was just a ton of opportunity. Like right here, this is 50% retracement. I'd like to see it go down a little bit more to about right here. And from right there, if you had a long trade that happened on the next bar, if you had a down close on this one and then a long trade on the next bar and up close on the next bar, that would be a perfect trade setup to do another leg like that. Okay, right there. That's exactly what you're looking for. And so if I could find my DOM, I would put that on right now. Where is it? Here it is. I can still put it on, right? So I just put it on right now. All right. So what I'm looking at here, I want to see 10 ticks in profit, and I'll bump the stop to break even. It just went almost 10 ticks. It's got to get up to 0.4 right here. Okay, if it gets up to 0.4, we'll bump the stop to break even. I'll just get ready for it right here. And what it should do, the minimum of what it should do, one more tick, there it is, stop to break even. And I know I make it look easy, right? There's plus 10. And this is plus 20. And we'll see what we get with this. Right, 10. All right, so that did exactly what it should do so far. What it really should do, it should get up here to the prior swing high, at a minimum up to the prior swing high, and then finish off this leg length. It's probably going to take 2 legs to finish off that leg length. But that's exactly what you'd expect out of it, right? And that's what I was talking about the markets going to where they should go and stopping where they should go, where they should stop, and then continuing in the direction they should continue in. All right, that was the Russell. The ES. Now, I almost didn't trade the ES. I got to thank Bobby again because we killed it on the ES. I think we had probably our best day ever on the ES in the room. See, I did a whole lot of drawing. That was because of Ronnie. I don't know if you're in here right now, Ronnie, but that was all because of you. Oops. Hang on, I'm going all the way back to 6 a.m. There. Okay. Let's see. Is Ronnie in here? He's not. Okay, well, anyway, our first trade here on the S was right here, and we picked up 16 ticks on the first trade. And then break even, then we stopped out there. And things got kind of messed up. I actually ended up positive after the second stop out, but I just put myself back at 0 on that because the stop out should have been 10 ticks. But I just started fresh from this one right here. And we got 28 ticks on that one, and we had a break even there. And then we got 10 ticks on that to get us to 38, and then 9 ticks there to get us to 47, and then 12 ticks there to get us to 59, and a break even, then 4 ticks to get us to 63, then a 25 tick stop out right there to get us down to 38. Then we went from 38 up to 65, and 65 to 67, and 67 to 79. Looks like, no, I'm sorry, 67 to 91. That makes sense. 67 to 91, and then 91 to 99, and then 99 to 104. So I got a 45 tick trade right there. I had 3 45 tick trades on the S today. We went to 144 there, and then from 144 we went to 189. That was another 45 tick trade, and then from 189 to 212, and then 212 to 224. Then we had a break even, another break even, and went from 224 to 228, and then 228 to 240, and then 240 to 255, and then we had one more 4 tick trade somewhere we lost. One more 4 tick trade that got us up to 259. So that was a ton of opportunity on the S today. You know, if you look at the old school stuff where the colors are in the YBR, a lot of those worked out to be trades today. But again, all we were looking for today, we're trading with the trend, as we were all week, really. We're trading with the trend, using the conservative trend trade. That means it's got to come out of the overbought, come out of the oversold in the direction of the YBR. All right, so like right here, came out of the oversold in the direction of the YBR. That was a long trade, right? This is all during the break, right? There, every one of those, even up to here. This probably would have been a break-even trade right here, okay, because it went 10 ticks in a profit and it pulled back. This one right here would have been, you would have been buying at the open of this bar. That might have been a stop out to the tick, right? Could have gotten right back on that one, this one. That would have worked out eventually. if you stuck it out, it would work out eventually. That would have been good. 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 That. But you're going the short here. Once it flipped it to the other side here, you're going short here. So that right there would have given you enough to get your stop to break even if you got a good enough entry. Then it flipped around to the other side. This would have stopped you out. This could have gotten it right back. Could have gotten it back again. And that would have been a break even for me. This would have stopped out. And this would have gotten it back. And this might have been a break even, probably a stop out altogether. That's currently where it is. Actually, you're long right here. This is a long right here where it's at. I'll try to put it on. It's just gone. I just missed it. It's gone 10 ticks into profit. So I'm going to cancel this. Okay. Oops. I meant to cancel that, but it actually, I clicked on the wrong thing. Okay. So now it's put me short. I am going to get out of this. I'm just going to hit plan and cancel because I didn't mean to put that on. All right. That was what the day was like. All right. So for the people who are just logging in on YouTube, if anybody's just logging in on YouTube, if you haven't taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. It's going to bring you to this registration page. All we ask is your name, email, phone number down here at the bottom. Gives you TradingView login ID. If you don't have one, click this link to get one. Okay. You got to get real-time data, or use whatever broker you have that feeds into it and use their data. So somehow you're going to get real-time data. You can pay $7 a month to get the real-time data from them, or you can try to get your broker's data to connect. All right. Now I am. All right. This is a trade over here on the gold right now. A down close on this bar would be a shorting opportunity. All right, I'll bring it over. We'll watch the DOM. It's going to be 10 ticks from the top of the bar is what we want to short. All right, 10 ticks from the top of the bar. So there's the top right there at 46. I'm going to short 45. So looking for a down close. The down close should happen right here at 45.1. Right, if the top stays where it is, now the top just went up a little bit. So now we're going to short one more. All right, the top just went up again to 46.3, so I'm going to short right there. The bottom of the bar is going to be right here. Okay, so if you get a down close, it's going to pull it out of the overbought, and it's going to give us a trade setup. It'll trigger us right in. There we go, bang, just like that. And now I'm going to lock in 10 ticks. Oops, that's 9. 10 ticks. And there's another 10 ticks, just like that. I know, I make it look easy. Once you understand what you're looking for, it just happens again and again and again. It should go down here to the prior swing low, right? That's what it should do. It's probably going to take 2 legs. This was 100% retracement to this leg right here, this pullback. That was perfect.
Those 10 ticks you just saw, that was good for your goal for the day.
It was. It was indeed.
And if you took that trade, you should now put your mouse away.
Exactly. Exactly. And this morning I got the very first trade. I got the goal for the day on the very first trade. Now this here, you see, it didn't put in a lower swing. It did go down to the bottom, and it made a flat spot in the bottom, but it didn't put in a lower swing. The fact that you get a flat spot in the bottom without putting in a lower swing just goes to say that you should be doing the conservative trades. All right. Now we need a down close on this. A down close on this would be a short trade right now. So we'll bring the DOM back over, and we put window on top, always on top like that. Okay, and the top of this bar is right there at 5.8, so I'm going to sell 4.8 right there. Okay, 10 ticks below the top of the bar because the bar is only 9 ticks high, so it just closed down. It just filled me at 4.8. So now once it gets 5 ticks in profit, I'm going to hit break even. It hasn't done 5 yet. My stop is 15 ticks away. Okay, there's 2. It's bouncing around a lot right here. Do we have something going on this afternoon? It's gapping a little bit. There it is. 5 ticks right there. 6 ticks. We'll lock in just 2. That's $200 with 10 contracts. There we go. That was 11 right there. Just doing the same thing again and again and again. right? I really like to see this keep going down, make a nice flat spot and put in a lower down here. That's what I'd really like to see, but I don't know that I'm going to see that. The pullback, you see this last pullback, put in a lower high. So it wouldn't surprise me if this one does that too. If it doesn't put in a lower low, it won't surprise me if it puts in a lower high, and then you're gonna have a triangle that we're getting into right here. So it's getting ready to make a big move one way or the other, is what it looks like to me. See that as it's developing, you can see that stuff. I don't know if you do, but as it's developing, you have higher lows and lower highs as it's developing. Do you guys see that? That's my third 10-tick trade since I started doing this session. We had 2 here and 1 here, I think, right? There was 1 on the ES. I don't know. I have to go back and look. But the opportunity is just there again and again and again. I really do think that with one contract, this is our best day. I'm pretty sure it's the best day of the year with one contract on the ES. We had a couple that were over 100, but nothing that was over 200. And I think I could go back many years and not have anything over 200 on the ES. It's because I went to the 19 range. And most of these things in here I would get with one of those wins. The 45-tick wins. I had 3 of those today. The volatility just provides so much opportunity for us all. See, we didn't pull all the way back up into the overbought, so it's keeping our highs lower. And right now it's starting to break out to the downside, but I have a feeling this is going to give us a head fake here to the downside and then move up. It's breaking out to the downside. So we're still looking for shorts in here. We didn't get an opportunity here because it didn't pull back and get into the overbought. But all the markets are running down right now. Okay, it is 120. 120. All right. Frederick is not in here, but I can reply to his. I just go and check again, see if he showed up. Nope, he's still not in here. Okay, we're in the overbought again. We broke out to the downside. We're in the overbought. So we're going to look for another short trade. The top of the bar is right here at 43.4, so I'm going to sell 42.4. Okay, now the top of the bar just went up a little bit higher. It's 43.6. I'm going to sell 42.6. Okay, I haven't even really been paying attention to these other 2 over here. They both have short trades coming up too. Both of them. And let me get that out of the way so I might be able to put them on. I had 3 trades going at once earlier today, and I think I ended up getting break even on both of them. Maybe on all 3 of them. All right, so we didn't get a fill on this. The top looks like it's gone up some more, and the top is now all the way up here, 44.6. So we're going to be looking to sell right there, 43.6. Now, if it goes up and it hits the YVR, we're not going to trade here. Okay. That's what disqualifies us.
If you're new and are struggling, do not attempt to trade 3 markets at one time.
Yes, do not. Okay, 44.7 is what we should be selling right now.
You only need 1 market and 1 good trade.
That's right. You only need to be good at one thing, really. You only need to be able to do one thing well. And this right now, I'm doing one type of trade right here. I'm doing a conservative trend trade. That's all I'm doing. And all these markets look like they're going to go up and hit the YBR. And so I'm going to cancel this because they all look like they're going to hit the YBR like that one just did. That's going to flip the YBR when the down close happens on this bar. It's going to flip the YBR. Same thing with that one, and this one right here didn't hit the YBR. So this could actually give a short trade, but both of those just flipped it, you see. So they're both going to give you long trades. So the ES is the only one that actually gave you a short trade in here on the open of this bar. Did you guys see that? In case you don't know, when price actually hits the YBR, you can't see it on the current bar because the YBR is not printing, but you can see where the YBR would be. So if price gets to the point where the YBR would be, when that bar closes, it's going to flip the YBR. It doesn't matter whether the bar closes up or down. It's going to flip the YBR. Okay. Now, I didn't get filled on the CS. My order is waiting way up
Also
there.
known as breaking the elbow.
Yes. Yes, breaking the elbow. So that is that's from a long time ago. Old school stuff, but it still works. I mean, it's always worked. And
Dan, in answer to your question, what market do you suggest a newbie trade first? Under normal market conditions, your best bet is probably the ES. But the ES has been as volatile as Bitcoin of late. Now, we need volatility as futures traders. We don't care if the market's going up or going down, because we can trade in either direction at the drop of a hat. So, yes, we need volatility, but it has to be manageable volatility. So
to answer your question.
So find the market. Yeah, go ahead.
I was just gonna agree with you. I mean, you were leading towards saying the ES is we would normally say if you're going to just pick one market, pick the ES because it's normally pretty slow, but it's been really volatile lately. On the smaller time frames, it's been really volatile. Going to a larger time frame like this on the ES, you might want to go to the micros, so you're not risking as much. You go to a larger time frame on the ES on a micro and not risk as much. And the liquidity on the micro is actually more than it is on the regular contract right now. So you could trade 5 micros with half the actual risk. That's half the dollar risked in, and still take advantage of the movements that you're having here on this, right? The reason I wouldn't normally do this for somebody brand new, I wouldn't normally do a 19 range on the ES because it's just too much money. You're risking $300 on every trade, over 300 on every trade, and that's more than we like to do.
Earlier, when we looked at the daily chart of the ES, it was doing its best to hold above the 38% reverse fib, which puts it on track for the daily BVC and the 50% reverse fib. And no matter what market, when you hit a 50% fib retracement on a daily chart, that's a big thing. When we had that historic run up the other day, the biggest run up in the history of the markets, we hit the 50% fib and the daily BVC, and we promptly got a 50% retracement of that day. Now we're back trying to get to that 50% fib again. This time, potentially, we break through it. Maybe not today, maybe Sunday night, maybe Monday. Who knows? As Michael mentioned in the live training room this morning, Trump could put a post on Truth Social at any time, and the markets are hanging on his every word.
They sure are. Change fortunes in a text message. It's simple as that. Like yesterday, I think his message yesterday was, might be a good time to buy. That's what he said before the markets yesterday.
That was Wednesday.
Or Wednesday. Sorry, Wednesday. Might be a good time to buy. Isn't that what he said? Something like that.
Yep. He said, could be a good time to buy. And we then went on to have the largest historical run-up that day. And of course, now Schiff and his cronies are trying to cry market manipulation. He told you at the market open, it's a good time to buy. I don't know how hard that is to understand.
It's not like he just told one person,
He told the world.
Yeah. It's not like he just told one person, and it's no secret when there's blood in the streets, it's a good time to buy. When markets are way down, it's a good time to buy.
And as we speak, Carolyn Levitt is holding a briefing with reporters right now, as she does every day. And based on any questions she gets and answers she gives, she is so smart. What an incredible pick over the last 2 press secretaries we had.
Oh, yeah.
They were both they were a joke. They had binder. She didn't have a clue what was going on. She had this big binder. If somebody asked her a question, she would rattle
Yeah.
through it and go,
Reference. Okay.
what?
This is
Yeah.
from A or whatever it is.
And then the
Say,
one before was like, well, we'll circle back to that later.
yeah, we'll circle back then. That was the redheaded one, right?
I have yet to see Caroline not be able to answer a question
She has got a
correctly.
beautiful mind.
Yep. Beautiful woman with a beautiful mind. We're not sexist.
All right. A down close here on the gold would give us a short trade. That'll be the last one for this session. It didn't give us a down close. It gave us an up close. None of the other ones are giving us anything. We did have a short trade here that we could have done, a short trade over here that we could have done, and nothing on the Russell on the short side. There was one long trade here on the Russell. Looks like it would have given you break even, and potential for one more short trade here on the gold, and there is right there. Okay, so let me get rid of that order that I had a little lower. Here's a short trade on the gold. All right, it's got a 15 tick stop. So we'll see how we wrap this up. My entry is at 44.6, and that is only one tick off of the proper entry, so that's not bad. Need 5 ticks in profit to bump the stop to break even. And it should get down to right here to 43.2, right here. Okay. So I'll get ready, and we'll see what happens. It's in a little bit of chop right here.
Is filled, so
We're just waiting.
at this
Everything
point,
to
what
stop
do you
up?
do? Nothing. You either
You just
stop
wait.
out
Yep, there it is.
like that, or move your stop to break even when it's time.
And that's okay. That was 1 out of 3 trades that I took that stopped me out. So overall,
I
I'm
think you
up
took.
pretty good.
Didn't you take 4 trades?
I don't know. Did I take 4? I don't know. I'd
You
have to
took
go back
3
and
in
look, but
gold. Did you trade anything else?
I thought I traded the Russell. I
Yeah.
traded either the ES or the Russell one time, and I took 10
You-
ticks on whichever one it was.
Yeah, so that's 4 trades. 1 stop out.
Not bad. All right.
You're,
That is it, guys.
never
Let me
going to
show you.
get good enough, guys. If you live to be 1,000 years old, you'll never be good enough to never get stopped out again. So
Never
quit
stop
chasing
out.
that holy grail. Stop wasting your time and treasure. Professional traders waste no time, energy, or treasure chasing something that doesn't or cannot exist. It's like looking for a black cat in the dark that doesn't even exist. It's not possible. There's too many factors. AI is not going to fix it. Algorithms ain't going to fix it. No indicator, no oscillator. It's a part of trading. So, anyway, go ahead.
All right. Well, let me just wrap it up by saying if you haven't taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Click on that purple button, and it's going to bring you to this registration page right here. Just fill it out. All right. When you fill out that registration page, you will then, down here at the bottom, you got to make sure you give us a trading view login ID. When you fill up that registration page,
Is it
we'll be
already
able to
set up
send you.
for next week?
It is. Yep.
Okay.
He's got all this stuff right here. I did it before we finished the meeting last night. Val
Okay.
created it already, so I did it last night. Yeah, so you're all set for next week. If you do that, we get your indicators indicated. If you sign up for the trial today, we'll get you going today and have the weekend to end all of next week. And Robert M., I see you're in here right now. We'll get you going for next week too, all right? Because I know you came in like at the end of this week. All right. And Jerry, you should already have the email for the meeting that we're going to have here in a few minutes. And all right, and that's it. I guess with that, I'm going to pass it back out. Wes, I have you down for Monday. And Mike Art, I have you down for Tuesday. All right, that is it, guys. With that, I'm going to pass it back out to fabulous Phoenix, Arizona in Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep. Okay. Recap of the morning session.
Today, it took 2 minutes and 1 trade to get to $1,000 with 10 contracts on.
Good job.
Thank you.
All right, guys. We'll pick up where we left off and wrap it up. Crude oil. This is the open last night. Again, if you weren't tuned in earlier, these targets were published 5 minutes before the Globex opened last night, 5:55 p.m. Eastern. So we opened right at the BBC with blue and climbing directly above price. When that happens, that becomes, so you have resistance times 2 right here. And so what did it do? It sent price right down to the weekly trading zone. The zone that was published Monday morning at 6:15 a.m. Eastern. When price drops to a weekly trading zone, we expect support until proven otherwise. Support, support, support. Yesterday we had support there, but this is wide-ranging consolidation. Only 3 things happen at a zone: consolidation, rejection, and the slice. Now typically on a slice like this, when a 30-minute candle slices through a zone like it's not even there, price will typically retrace back to the zone it sliced through and continue in the direction of the slice. There was so much buying pressure here. When this candle opened, it went red, but buyers swooped in and carried it right on up to where? The weekly trading zone that all members and trial members had Monday morning at 6:15 a.m. Eastern. So resistance and the market to support. Caught a little bounce. Okay, you see these highs or this high, market structure. Down to the zone, support, consolidation. Once we get above the BBC, we got that perfect stack. Price, step line, blue and climbing, BBC. And we ran right up to the long target. Resistance will send us to support. Support will send us to this resistance at red and falling. Back to support. Now we've overcome the target. Okay. Now the step line is starting to lean to the right. See how it's directly above blue and climbing? Okay. If that step line crosses blue and climbing, then you expect a retracement back to the BBC. So where should you be looking for resistance now? You see this bearish cross that led to an extended move? That's when the red line gets below the green line. Okay, so bearish cross. The first time price revisits that area will almost always be good resistance. So from right here, you're probably going to see a retracement back to the top of the long target, the step line, blue and climbing, or the BBC. If you trade through the BBC, then you got potential support here. Then you're back at the zone. Okay. See the cross? That's what we're up against right now. First time up will almost always be good resistance. Now once it backs up and makes another run, it may get through it, which leads you to your next resistance, potential resistance, 62.25. But it's all in the Logic 247. I've already outlined all of these potential areas of resistance for you last night in the Logic 247 alerts. Okay, see how price is kind of ground to a halt here? Previous bearish cross. Gold. This was the open last night, and within the first 30-minute candle, and of course the targets were out 5 minutes ahead of the open. This one candle, see if we can get a read on it. Opened at 3194.2 and ran from, hang on, the open from, I just call it 95. $400 per contract traded in that first candle up to the target. We then got above the zone, pulled back into blue and climbing, got another leg, retracement, a leg, and then you see how the step line crossed blue and climbing? See, on the way up, the step line was on the left side of blue and climbing. Now it's on the right side of balloon climbing. So what do you expect? A retracement to the VBC. The pullback to the VBC holds more often than it doesn't. Like here, and here, and here, and here, 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 and here. Now, blue and climbing is turned to red and falling because the step line has crossed blue and climbing. So, our institutional buyers, do they have the intestinal fortitude to keep buying at these all-time historic highs? If so, they'll overcome red and falling. If not, you're going to see a retracement back to the zone and the top of this long target. Silver. Here's where we opened, and on the second candle, we hit the long target. We opened at 31.12, we'll call it. And so up to the target, 7 pennies, $350 per contract traded. Now, silver is up on the session over $5,000 per contract traded. When the price of silver changes by $1, okay, from, what did I say the open was? 31.12. At 32.12, right there. That's $5,000 per contract traded. And every time price pulled back to the VVC, what happened? The pullback held again and again and again. The step line has crossed, so we would anticipate a retracement to the VVC. Blue and climbing is directly above price, so now it's potential resistance. On the way up, you had that perfect stack: price, step line, blue and climbing. But then the step line crossed, blue and climbing got directly above price, and you can see what's happened. Price is starting to back off. I'm not saying it can't trade through it. It can. I'm just telling you what typically happens. In the Logic 247 channel, there's over 19,300 individual handcrafted alerts. We're sitting at 11% stopped out so far this week. It was 2% last week. What we've averaged over the 347 weeks, I think I said it was earlier when I showed it to you, we've averaged 20% or less being stopped out. So, best work, well over 6 years, all those alerts. We had a couple weeks with 0%, but that was a fluke, okay? And we've had 1 or 2 weeks where we closed at 21 or 22% stopped out. But even in a very rough and volatile week, so if you're striving for something better than 20% getting stopped out, you need to rethink your business plan. And in your 24/20 blueprint that you get when you become a passport holder, it teaches you how to write your business plan, how to write your trading plan. Those are two very different documents. And yes, you need them both. Okay? It's like if you owned a Subway franchise. If you bought a Subway franchise, you'd get 2 different sets of manuals. One set of manuals is about how to operate a Subway shop from the business end. The other set of manuals is how to make the sandwiches. See, they've got this thing down to a science. That's why Subway franchises are so popular and expensive. And if that manual says on a 6-inch sandwich, you put 2 slices of cheese, and you got some kid who's half stoned and he wants to be, you know, the nice guy. He's throwing 3 slices of cheese on every 6-inch sub because it's cool, right? It's cool, dude. Well, guess what? Over time, that is going to affect the bottom line tremendously. So now the owner of the franchise is going to go find out which one of the knuckleheads behind the counter is not following the instructions. Okay? So back to the 24/20 blueprint. Teaches you how to write your business plan and your trading plan. And if you haven't done those and you've been with us for any period of time, you know, I'm going to just say you really aren't serious about becoming a trader. Let me sound harsh. I'm sorry. It's the truth. Okay, we're well above the 38. Remember, at the beginning of the broadcast, we were just starting to break above the 38. If you missed the beginning of the broadcast, you can watch it later on the YouTube channel, youtube.com/CFRN. Said, I believe we're going to see him run it up to the previous 2 days high, which is at the daily BBC and the 50% reverse fib. So we had a leg, 50% retracement. Now we're headed for that area again. And we got stopped in our tracks 2 days back to back at that 50. If we hit it a third time, the potential or probability of us actually breaking through is pretty good. But until it happens, don't count, what is it? They say don't count your chickens until they hatch. See, we still got this gap over here. Going back to April 2nd, April 3rd. So that gap lower open. That gap has not filled. And that's very unusual for the indices. So this is going to be a tough nut to crack. But once it does, boom, we're at the 62. And we got resistance here, here, right here where these two cross are lined up together. Okay. And then here, and then the bearish cross, and then here, and then the all-time historic high put out on December 6th. This could change by the close of the session. If the institutional traders are not fully convinced, guess what? This is going to become a shrinking violet. You could potentially even end up with a red candle. You have to embrace all possibilities. But in learning to read a chart, you know what the possibilities are. So, therefore, you are prepared for whatever happens. If it continues higher, you know what to do. If the bottom falls out, you know what to do. You've already evaluated the chart. You've got 2 contingency plans. If the market continues higher, if the market reverses. So you lay out your plan, and then based upon how price moves, you simply execute what you've already planned. You don't make your decisions in the heat of the battle. Okay? You don't want to be the soldier who's down in the trenches with bullets zinging past his head. You want to be the general up on the hill in the tent with the glass of sherry, the cigar, and all these maps spread out before them, telling the troops, go here, go there. Okay? Sadly, most traders are the ones in the trenches with the bullets zinging past their head. No clue what the overall plan looks like. The daily chart gives you that ability. And Stefan, very kind of him, he shares a lot of 4-hour charts. Okay, but typically 4-hour charts are used by Forex traders, but they can work very well both in equities, futures, crypto, Forex, ETFs. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. If you know how to read a chart, you knew to expect resistance or support here. And you know to expect resistance here. We've already overcome this resistance. At the beginning of the broadcast, we were trying to overcome it. Well, we've now overcome it. So, how the deep pockets that move price handle this the rest of the session. Either way, remember you embrace all possibilities. Sunday night should be a very active and interesting open. Okay? All right. At My Trading IQ, you can gather a lot of information about who we are, what we do, etc. Once you've been there and have the information you need to make a decision, when you're ready to become a member, email us support@cfrn.net, right there. In the subject line, put "I want to become a member." The body of the email, put your name and phone number. We don't plan to call you, but we will send you an email that explains everything it means to become a passport holder and the multitude of things that you have access to. And there'll be a link you can click to seal the deal. 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. We've plugged that hole by providing you with 2 hours of live interactive training every trading day. On top of that, you get private one-on-one mentoring, the strategy you learn, the indicators you own as a passport holder, fluid across all markets and all time frames. Because, as I just said, price flows the same across all markets and all time frames. As a passport holder, you'll get the Logic 247 alerts round the clock, concierge trade alerts the second they're published each evening. Monday morning, 6:15 a.m. Eastern, you get the weekly trading zones. Once they're published, they're carved in stone for the entire week. And as you just saw on the charts today, the zones that were published Monday morning, this past Monday morning at 6:15 a.m. Eastern, here it is Friday, and they're still doing their jobs. Defining potential support, potential resistance. They really do make learning to read the chart simple. Nothing about trading is easy, but it can be simple. Also, you'll be able to attend the members only workshop every Thursday night. And you get the golden key that opens all the private channels in Telegram. We have public channels, private channels, but as a passport holder, you have access to everything. Send your email to support@cfrn.net. Okay, let's wrap it up for the week with our good word for today. Today we're going to talk about wrestling. You should expect to wrestle. The new birth brings a new battle between your regenerate spirit and your unregenerate body, which still craves old desires and clings to old proclivities. Paul describes this graphically as a wrestling match in Ephesians 6:12. For we do not wrestle against flesh and blood, but against principalities, against powers, against the rulers of the darkness of this age, against spiritual hosts of wickedness in the heavenly places. Therefore, take up the whole armor of God, that you may be able to withstand in the evil day, and having done all, to stand. We did a whole devotional series a few weeks back on putting on the whole armor of God, each piece. The winner in a wrestling match is the one still standing when it's over. So picture a wrestling match, and you'll get an idea of what you're up against each day. Two fighters going toe-to-toe until one wins and the other loses. To prepare themselves, they practice for hours. Each knows they need two things to win: strength and a strategy. But they need more. They need determination and endurance. And each knows one more very important thing: never underestimate your opponent. Be sober, be vigilant, because your adversary, Satan, walks about like a roaring lion, seeking whom he may devour. Resist him, steadfast in the faith, knowing that the same sufferings are experienced by your brotherhood in the world. 1 Peter 5, 8 through 9. Here are two scriptural truths you need to live by in order to walk in victory. First, don't try to overcome Satan in your own strength, or you'll lose. Second, don't let your guard down, even for a moment, or you will lose. Paul writes in 2 Corinthians 2:11, lest Satan should take advantage of us, for we are not ignorant of his devices. So expect to wrestle and expect to win. And that's our good word for today and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this: there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.